Today I want to talk about SoFi and give you an overview of the key data points and recent movements. We'll also dive into some important factors you should know about the company. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert this is not a financial advice video. Starting off, SoFi closed the day in the green, up 0.47%, hitting a high of $8.76. Given the current market conditions, that's pretty amazing stuff. If you had told me yesterday that the Consumer Price Index CPI data was going to come in higher than expected, both month over month and year over year, along with higher initial jobless claims, and on top of that, rising tensions in the Middle East, I would have been pretty skeptical that SoFi would close in positive territory. Yet, here we are. Against all odds, SoFi managed to rise, and that speaks volumes about its strength and market sentiment. Now, it's important to note that despite all the negative macroeconomic data, such as the Federal Reserve's stance on holding interest rates steady for now, SoFi still managed to climb. This is especially surprising given the overall uncertainty in the market. But what helped SoFi buck the trend? One major factor was the surge in large transactions on the secondary market, with all of them being buys. We saw several big purchases, including one for $9.76 million and another for $2.3 million. These transactions came in strong, pushing SoFi higher right out of the gate. While negative news and algorithmic trading were factors that could have dragged the stock down, they were overwhelmed by this buying activity. And the good news doesn't stop there. Shorts actually returned some shares, 356,000 to be exact, which brought the percentage of SoFi's float being shorted down to 16.93%. To put that into perspective, about 177.09 million shares are being shorted, which equates to roughly $1.52 billion. Over the last month alone, short sellers have lost around $300 million. That's a massive hit for those betting against SoFi. Now, we know that short interest can create a volatile environment, but SoFi is showing resilience. Shorts are losing money, and the stock continues to move up despite all the negative external factors. It's worth mentioning that there were no significant news announcements or filings from the SEC today regarding SoFi. The company is performing well without needing major updates to drive it forward. In fact, bullish sentiment is growing with more positive articles coming out. One article in particular highlighted how SoFi is defying what's called the Jim Cramer curse. For those of you who may not be familiar with this, Jim Cramer, one of the most well-known financial commentators, stated around 3 weeks ago that he was bullish on SoFi. Typically, when Cramer endorses a stock, it tends to fall shortly after. However, in SoFi's case, the stock has continued to rise, defying this so-called curse. It's always fun to see a company go against the odds like that. Now, moving over to the options market, SoFi has seen a significant amount of activity here as well. A total of 8.65 million went into call options, while 1.35 million went into puts. While 46% of the options were bearish, there was still a lot of bullish interest. Furthermore, there's a lot of optimism that SoFi's stock could break into the double digits soon, especially around the time of its next earnings report. In fact, there were over 12,000 call options for the $10 strike price, signaling that many traders believe SoFi could climb higher in the coming weeks. But the question is, what's driving this optimism? Well, SoFi has been doing a lot of things right. First off, the company is gaining more traction with its financial services, including loans, credit products, and investment options. This has positioned SoFi as a leader in the fintech space, offering an all-in-one solution for consumers looking to manage their finances. They're making a name for themselves by providing a seamless experience across their ecosystem of services. SoFi's focus on innovation is another big plus. The company is not just resting on its laurels, it's continuously improving its technology, making it easier for people to access financial services through their app. And with the current trend toward digital banking and financial services, SoFi is in a prime position to capitalize on this shift. Additionally, SoFi has been expanding its membership base, which is crucial for its long-term growth. The more people who use SoFi services, the more revenue streams the company can tap into. From loans to investment accounts, SoFi offers a wide range of financial products that cater to various needs. This diversification helps the company weather economic storms like the one we're currently experiencing. Another factor to consider is SoFi's upcoming earnings report. The market is already expecting good things, and if the company meets or exceeds expectations, we could see an even bigger rally. The company has been consistently beating estimates, and this has fueled even more excitement among investors. If SoFi can continue this streak, it will likely attract even more attention from both retail and institutional investors. That brings me to the broader market context. Yes, there's a lot of uncertainty out there, with inflation concerns, rising interest rates, and geopolitical tensions. However, if you take a step back and look at the bigger picture, the market is still strong. Unemployment is low, consumer spending is holding up, and companies like SoFi are growing despite the challenges. Unless we see a major escalation in geopolitical conflicts or a drastic change in economic data, there's no reason to believe that stocks like SoFi won't continue to rise. That being said, it's important to remain cautious. While things are looking good right now, the market can change quickly. SoFi is doing a lot of things right, but external factors like the Federal Reserve's policy decisions or unexpected news could create short-term volatility. However, if you're a long-term investor, SoFi looks like it's in a good position to continue growing. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.